Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of December 29th, 2014. It's the last one for 2014, guys. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week, Maryland mortgage rates did move higher after the GDP was released on Tuesday. So that did move interest rates higher. Take a look at the bond chart on the screen. You can see that red candle there down is when mortgage bonds sold off and moved interest rates higher after a better than expected GDP. Now we did hit a level of support and stop, and then on Wednesday you can see the green candle there. We did bounce off support and recover, and then Thursday was Christmas, so the bond market wasn't open. So the last green candle was on Friday, confirmed the rebound, and again bonds moved higher, so we did recover some of the loss that we had. But we still ended the week slightly higher than we started. Now with that in mind, since we did have a bounce off support, we're going to recommend floating your Maryland mortgage rate to start the week to see if bonds can build on this momentum. Now if we dig into the economic news last week, the big report was the gross domestic product, or the GDP, for the third quarter of 2014. It came in at a blistering 5%. That's huge. That shows the economy is really rolling along. And that was the fastest pace of economic growth since the third quarter of 2003. So this is huge. The big gains were led by a surge in consumer spending and business spending. Now we had some other economic reports, the next big one being the consumer sentiment for December 2014. That came in better than expected at 93.6. That's the best reading in 8 years. That shows consumers are feeling very good about this economy. Hence, that's why we had a 5% GDP. So all that is going great. And then the personal consumption expenditure, the PCE, came out last week. That's the Federal Reserve's favorite measure of inflation. It dropped. It came out negative 0.2%. That's great news. That's basically saying we don't have any inflation. The year-over-year inflation actually dropped to 1.2%. So no inflation, good news for bonds. And then we saw the weekly initial jobless claims come out on Wednesday. Another great report on the labor market. Claims dropped 9,000 to 280,000 claims for the week. That shows a good labor market. Claims have steadily been below 300,000, which is what we need for an improving labor market. So that's, again, a good sign of an improving economy. In the housing news, we saw the National Association of Realtors report that existing home sales for November 2014 fell by 6.1% from October, down to 4.93 million units on an annualized basis. That was below expectations of 5.2 million, and it does show the housing market recovery is choppy. We're going up, we're going down, we're going up, we're going down. So this was just a 1 month report, could be just an anomaly, doesn't mean housing is falling off. But if we do keep getting December and then January reports showing a drop, then that would show housing market is slowing. But right now, nothing to worry about. We did have a drop, but it wasn't a big enough drop to make us concerned. And then we saw the median home price for existing homes was $205,300. That's up 5% from the previous year. So if you bought a home or owned a home in 2013, that's a $10,000 gain for you if you're the median home price buyer. That means if your house was worth $203,500, the $10,000 on a 5% appreciation. So that's why it's important to buy and own real estate. That's how you generate wealth over time. That 5% doesn't sound like a big number, but on $200,000, that's 10 grand of equity appreciation. So if you're not owning a home, get out there and own a home. Then we saw the Federal Housing Finance Agency release their home price index for October. It shows home prices were up 0.6% from the previous month and above expectations of 0.2%. Now that's a dated report, but that does show that the housing market is doing good. And then in new construction, we saw new home sales for November 2014, and they were reported down 1.6% to 438,000 units. That was lower than expectations of 460. But all in all, that's not that bad of news. Again, some choppy news there, but new home construction still doing good. Did have a slight drop of 1.6%. We'll have to see how that plays out in December and January. And then in other housing news, Congress passed the Tax Increase Prevention Act of 2014 in a last-minute session. Had two great things for real estate. The first one was Mortgage Debt Forgiveness Release Act of 2014 was included in that bill. So if you had a short sale or foreclosure in 2014, you do not have to pay federal income tax on the forgiveness of that debt. So that's huge. And then the other one in there was the mortgage insurance tax deductibility for 2014. They extended the ability to deduct mortgage insurance. So if you're paying mortgage insurance in 2014, you can deduct that on your federal income tax return as long as you make less than $109,000. Now in the local news, the next first-time homebuyer seminar is Saturday, January 14th in Frederick, Maryland. And that's from 10 a.m. to noon. And then the next one In Laurel is Wednesday, January 17th from 6 p.m. to 8 p.m. at the North Laurel Community Center. And then the next one in Towson is Saturday, January 31st from 10 a.m. to noon at the Sheraton Baltimore North Hotel. You can register for either one of those events. Give us a call in the office, 410-412-3319, or online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.